high. In fact, let's talk about Apollo Hospitals reacting to a strong set of Q1 numbers, healthy revenue growth, margin expansion. Suneeta Reddy, Managing Director at Apollo Hospitals, is now with us on the show. Thank you very much, ma'am, for joining in. Strong performance in Q1, 15% revenue growth, EBITDA margins 14.6. Give us an overview what led to the growth in the current quarter and what would the guidance be for FY26? I think you're targeting a double-digit revenue growth. What will drive that?
So we grew 15% consolidated revenue. Numbers came in at 5,842 crores. But more importantly, EBITDA grew to 845 crores. So there's a significant improvement of 26%. And PAT at 433 crores, improvement of 42%. So headline numbers look good. More importantly, I think, the revenue has translated into profitability, into EBITDA. In the healthcare services business, there was 11% growth with 2,935 crores of revenue, representing 11% growth. EBITDA grew by 17% to 718 crores, and profits came in at 384 crores, representing an 18% growth in profits. So more importantly, healthcare margins were strong at 24.3%, representing an 83 basis points improvement over last year. Apollo Health and Diagnostics showed a healthy growth of 19% with the revenue of 430 crores, EBITDA at 40 crores, and a slightly negative PAT of 8 crores. But moving forward, I think, Apollo has established a primary care platform, a secondary, tertiary, as well as a great funnel for patients, an ecosystem for patients to move through the system using digital, which is our 24/7 app.
Ma'am, good morning. Prashant here. Strong numbers, and I think the market is responding to that. You said healthcare services revenue, that's hospital revenue went up 11%, right?
Yes, yes.
Whereas the AHLL and the Healthco are the ones which really led growth, 19-20% growth there. Was the hospital revenue growth at 11% a little softer than what you expected? And what can we expect here?
Yes, I think definitely it was a little bit softer than we expected. In terms of, moving forward, I expected to get back to 68%, 70%. And with that, the 14% improvement in revenue over the rest of the year. With this, we did have an impact of Bangladesh, where that impact is being mitigated in the second quarter. We found more patients, international patients, entering the system through the offices we've opened internationally. So, however, our payer mix continues to be strong, which is why our EBITDA is at 24.3%, and I think that is a very important factor. Insurance, private insurance. Go ahead.
Yeah. You're saying international patients will pick up substantially.
Yes.
What is that as a share now, ma'am?
Currently, it's about 5% of revenue. It was 7% of revenue, but in the North Indian destinations, it is picking up in our hospitals in the north. In Karnataka and Hyderabad, we're seeing a significant uplift. Chennai is starting to see international patients once again.
So you'd go back to 7% as a share?
Yes, we should.
By when, ma'am?
By the end of this year, we should be able to achieve 7%, moving towards 10% next year.
Right. So again, just to focus on the hospital business, inpatient and outpatient volumes were also maybe a little softer than what you thought, right? 3% and 9% respectively.
Yes, I think, you're right. The focus this year was on improving case mix, which is revenue from cardiology, oncology, orthopedics, gastroenterology, and this played out very well. We had an 8% increase in high-end tertiary care, which resulted in a 9% improvement in ARPP, which came in at 1,72,000 rupees.
Right. Got that. Could you give us a sense on the bed addition plans for the full year, ma'am? Where do we stand?
Yes. Currently, we're opening Pune with 250 beds by the third quarter. We're opening Defence Colony this quarter with 87 beds. Defence Colony is a fully focused women's healthcare, including onco unit. We have Sonapur in Calcutta with 250 beds, as well as Belapur. So Belapur is an acquisition, Bellinus Hospital, which is an acquisition in Bangalore with 150 beds. So these are the 4 hospitals that we will be opening in the third and fourth quarter of the year.
So in total, what are we looking at in terms of addition?
In terms of addition, we're looking at 500 beds added this year.
Okay.
Okay. Ma'am, you also announced the demerger of the omni-channel pharmacy Digital Health 24/7 into the new entity Apollo Health Tech. It's a move to unlock value for your shareholders. What's the status of the demerger right now?
It's been approved by the board. I think we've made the application to CCI and NCLT. This should take about 18 months. In about 18 months, we should be ready to announce, and following that AGM approval, we should be able to list.
Got that. But 18 months
Yes.
from here on,
Yes.
in terms of a timeline for listing.
Yes.
Okay. I know we've asked you this when, the plan was formulated about the Apollo Health Tech guidance, 25,000 crore of a top line, 7% margins by FY27. Now, I mean, even since then, the street is still a bit circumspect on how you're going to get to these numbers. I mean, can you tell us how it's changed? What's changed in the last 3 months that makes you even more confident or equally confident?
No, I'm very confident, because even if you look at the numbers, there was 2,747 crores of revenue from both online and offline. And in this, the most important 19% growth. EBITDA, however, grew more strongly at 25%. And this came in at 97 crores. Profits grew to 57 crores. So as I guide for the future, I think the change that's going to happen is with the integration of KeyMed, the back-end pharmacy. So you're already looking at a huge potential for almost doubling growth. And over a 3-year period with the integration, they should reach revenues of 25,000 crores. And currently, the offline margins are at 7.7%. Holistic margins for online and offline are at 3.8%. So they're also showing a margin improvement. If you look at the different lines of business, 4 lines of business, unit economics are good. All of them are profitable. So if you add to this the addition of the back end, I think, it is not only a growth at scale, but it's profitable growth.
We're also seeing competition rev up in the entire sector. Manipal acquired Sayadri Hotels for about 6,000 crores. They're adding 11 hospitals. I mean, give us the competitive landscape right now from organized players. There is PE backing large hospitals and large chains. Your own thoughts, and what are you planning? Are you looking at any acquisitions?
We continue to look at acquisitions. Let me just put this one figure before you. Of the 16 lakh beds in the private sector, 1 lakh are totally private, held by trusts, etc. They are only less than 50,000 corporate beds. So there is a huge structural demand-supply gap, and I think that corporate has done very well in lifting clinical quality. More importantly, if you look at our average revenue per patient, which is 1.72, it's 1.72 lakhs. It's now, we're accessible to insurance. So insurance has grown by 30%. Corporate hospitals, patients can access corporate hospitals. So therefore, we believe that the demand is strong. Patients have access to private health insurance, and this it will continue to grow. So consolidation is one way of growth. In Apollo, we believe both in acquisitions brownfield growth as well as green.
All right, we'll leave it there, ma'am. Thank you very much for joining us. Good speaking with you, and I really appreciate your time here. Stock surging 6% the last I checked, and these are on the back of a very strong EBITDA beat which has come through. 7,700. The share of international patients is going to rise. It's at about 5% now. It used to be 7. They're hopeful it'll go back to 7% by the end of this year.